available. One called Often, which stands for Order Flow Trading Enhancements, and that runs on both Sierra Chart and Ninja. We have one developed by Greg Schroeder, which is called the Trading Mantis. That runs only on Ninja. And we have a third package, set of indicators developed by Greg Childers, who's joining us in this session, who's developed indicators for TradingView. Just a little bit of brief history. I started developing Often about 5 years ago. I had joined the group a couple of years beforehand, and probably like yourselves, I was a bit confused and overwhelmed listening to Ray, having come from a sort of traditional Forex and trading environment, and suddenly talking about all these things like futures and contracts and liquidity and depth of market. It was all totally strange to me. And of course, once Ray started to explain that there are so many moving parts that you need to keep track of to make sure that you get the right price for your trade to both enter and exit, it became clear to me that, if you had to track what was happening on the value line, what was happening with volume, what was happening with depth of market and so on, it was going to be impossible to track all of this stuff accurately just by yourself with the naked eye. So that's why I started developing a number of indicators that would help me, at least, to try and keep track of all these moving parts. So the original version of Often 5 years ago was only about 10 indicators. It now includes 44 indicators. So it's evolved quite a bit over the years. Greg Schroeder's package, the Mantis package, has, I think, around 20-25 indicators, and the other Greg, his TradingView package, I believe, is around 9 or 10, maybe more. But in total, that takes us well over 70 indicators. Now, don't worry, we're not going to try and cover 70 indicators in one session. I'm sure you're already quite overwhelmed with what you've covered in the first couple of days with Ray. But what I've done is select a number of indicators that I feel are quite relevant to the topics that Ray covers in his classes. In fact, some of the indicators that you'll see in this session were actually specified by Ray himself. And at the time, I would develop according to his specification, send it to him for testing, and as soon as he was happy with it, it would be released to the group. So the indicators, as I say, really designed to help you understand the topics that Ray covers in his classes and help you follow along with where the key levels are, where the key prices are, and when we can expect things like price reversals or continuations. So without further ado, I'm going to start on Sierra Chart. And I haven't done the screen sharing yet. Here we go. That would be entire screen, yes. Okay. This should do it. Hopefully you can see the chart on the screen now. That's the crude oil. Let me go back to the ES. We'll start with the S&P. And I want to just maybe take one or two of these off for the start. so we can get a clear view of what's happening here. And we'll start with measured move. Now, measured move is an indicator that was specified with Ray, and it's basically related to the classes he does on market structure. And it, as you can see, it prints a number of different colored boxes on the chart. And let's just explain what these are. The blue boxes are what we call minor levels, and the green boxes are macro levels. Now, there is a difference in the algorithms, the way they calculate these particular boxes and the placement of them. But I'm going to go back to somewhat earlier in the day, because at this time of the day, there's not a lot of action in the market. So I'm going back to morning my time. Oh, I should have mentioned that the times at the bottom here are Central European time, which is my local time. I'm in France, and so for me the Frankfurt opens at 8 a.m. here, and the London Open is at 9 a.m. So my time is 1 hour ahead of London, 6 hours ahead of New York. So you see that just after the London Open, we had price move up, move down, and it stopped very close to this green level. Now that green level, as you could see, had been on the chart. It started printing about 9:05, 9:06, and price didn't stop there until about half an hour later. And this is one of the key points about the measured move, in that it prints well ahead of time of where it expects price to go. Now, the difference between the minor and the macro levels is that at a minor level, we can quite often expect price to stall. You see that from this minor level here, about half an hour later, price did actually stall at that point. But with the macro level, there's a good chance, it's not 100%, nothing's 100%, but there's a good chance that price will reverse when it reaches one of these green levels. Now, I think we'd all agree that if we have something that gives us a heads up 30 minutes in advance, the price is likely to hit this level and stop there. It may not reverse, but it will probably stop there. Then if you were in, for example, a short trade in one of these down moves, then it would be good to know that, first of all, it's probably going to stall here because of this minor level earlier in the day. And it may well reverse here. And you can see that it did certainly form a pin bar at that point and start reversing from the low. So that sort of advance warning is invaluable, in my estimation anyway, in terms of managing your trade correctly and making sure that you don't have or you don't run the risk of staying in a trade too long, not being aware that a key level is approaching. Because you can see that, I mean, there was another macro level, pretty much the same price within a tick or two, which was on the chart much earlier. So this was clearly a key price level that price was going to respect once it got there. Okay. Now there is another setting you can put in the measured move, which covers another topic that Ray has mentioned recently, which is this one. So these horizontal blue and pink lines are what Ray often refers to as a tipping point, or a 50 line, or half back. So basically the blue line is representing the halfway of the last up move, and the pink line is halfway of the last down move. So this can save you some time in terms of calculating if we're close to a tipping point or not. Price will not always stop there or stall there, but you can see on occasions it does. So again, it's something that you can put on the chart to keep you aware of where the potential key price levels are. Now the indicator comes with an alert function. So you can set an alert for when it's approaching a key macro level. So you can see up here, for example, where price reversed. Could have been useful if you were in a long trade at this point. Would be useful to have an alert as it got within a few ticks of this level to say, heads up, you may want to get out the trade here, because it's a good chance it's not going to go through this level just above. And sure enough, it had a couple of attempts to go through it, but eventually just reversed and went down. So that's measured move. Yes, Michelle, measured move is available on Ninja. I'll mention, in fact, I think there's only one indicator I'm going to show in this session that is, for the moment, only available on Sierra. But everything else you see is on both Sierra and Ninja. Okay. No more questions on measured move. Right. So next one I'm going to put on here is Voltic. Now, you may have heard Voltic mentioned in some of Ray's classes. He's been using Voltic for quite a while. Voltic was one of the original indicators in the first release of Often. And what Voltic is doing is monitoring the speed and volume of trading at a particular time. And basically, it prints these colored dots on the chart where it finds that the current speed of and volume of trading is significantly abnormal, put it that way. The blue, pale blue dots mean that the trading activity here is at least twice as high as the normal or the average trading activity. It computes an average based on preceding bars. You can set the parameter to determine over how many bars it will calculate the average. But that indicates that price activity was, or trading activity rather, at that price was at least double the average. The orange circle, you see one here and one earlier on, that means that trading activity there was at least 3 times the average. So a significant amount of trading interest at that particular price. Very often it's enough to cause, a particular move like this down move stopped there because there was quite a bit of activity around that price. And right at the top here, we have one purple Voltic, which means that the trading activity there was at least 5 times the average of trading activity. And those sort of Voltics very often will accompany a reverse in price direction. One important thing to watch for is where you have a cluster of Voltics altogether. You see, the 5 times plus a couple of one-time double trading activity signals here, and about 4 or 5 Voltics altogether here. because those will very often accompany a change in behavior of the market. I know that quite a few traders use Voltic as a signal in their trading to either get into a trade, because obviously there's a high level of trading activity. There have to be both buyers and sellers in there to make it happen. And with price moving in one direction, that means some traders end up being trapped. So in this case, people who are selling at this level in this frantic activity down here would end up being trapped. So putting your entry just above these Voltics can be quite a safe entry point, because if you have all those trapped sellers below, then as soon as price goes against them, they're going to start puking their position, and that their buy trades to get out of their position will help your long trade to move up. So Voltic's quite a valuable indicator. I think it's quite extensively used in the room. And as I say, it's certainly been one of Ray's favorites for quite a few years now. Again, this Voltic works on both Ninja and Sierra charts. Okay, no more questions for the moment. Right, next one I'm going to put on here is a thing called the pressure line. So this is it down at the bottom here. Now the pressure line is has a particular algorithm to calculate the strength of movement in the market. Now typically it will move in the same direction as the market, but not always. And we are certainly interested in divergences of direction. So, for example, if you look at this part of the down move here, we have a Voltic at the bottom, but in the last part of that down move, the pressure line was increasing quite significantly. So that's a clear divergence, and it's a very good indication. Again, not 100%, nothing is perfect, but it is a very good indication that price will reverse at this point. Now, picking out divergences with the naked eye can sometimes be a bit challenging. So we developed another indicator to help with that, which is called market divergence. Let me just check settings here. Okay, we'll start off with that historical divergence. So with that historical divergence, it will simply print the most recent bullish divergence and the most recent bearish divergence. Now, again, at this time of day, there's not a lot of activity to go on. So I'm going to put on the historical divergence. It'll take a few seconds for it to calculate over a couple of hundred bars. But this will give you a view of how it's been reacting throughout the day. It's measured move, not the one I want. So we're going to switch on, no, not that, this one. I'm going to switch on the historical divergence. So we can see where we had divergences between price and the pressure line throughout the day today. All of these charts are from today, cherry pick anything. So here, for example, yellow line means it's a bullish divergence. White line means it's a bearish divergence. So you can see that clearly as on this down move here, price is moving down, but the pressure line was moving up. On the opposite side of things, here we had price moving up, with the pressure line moving down. Now, doesn't mean that you'll get a huge change of direction. You'll typically get at least one or two ticks in the opposite direction from each of these signals, which for scalping may be enough at least to get you a scratch without losing anything. But quite often these will turn out to be very useful signals. You see one here, bearish signal, Voltic at the top as well, which turned out to be quite a good profitable trade. Same thing here, smaller move, but pretty quick one, where the price is going up, but the pressure line moving down. Again, you can have alerts set to warn you when a divergence is taking place on the charts. So pretty easy indicator to work with. And I'm thinking in general terms, a very shallow line tends to be less valuable than a steep one. See the angle on this, for example, was much steeper than some of the other lines you got here. So again, it's not something that you trade directly using just one signal, but can be very useful as you're approaching maybe a macro level on a measured move, or you've seen a bunch of Voltics appear on the chart, and you want to be careful that, or you may get a signal that price is about to reverse at that point. Question about the numbers underneath the Voltic. So as well as monitoring the volume and speed of trading, it keeps track of who's doing most of the trading. Is it mostly sellers or mostly buyers? And it computes that as a ratio between the two. And obviously a ratio can't be negative. I'll just put a negative sign on it to show that it's very clearly sellers who are at this point. And I think if I move it back a little bit, we'll see. Here we go. At the left-hand edge here, you can see that right at the bottom there was an orange Voltic with sellers, predominantly sellers. And then a number of Voltics with predominantly buyers. And subsequently, not surprisingly, price moved up. Now that ratio, obviously when it's something like 1.01, it's pretty much 1-to-1, so there's no big bias in either direction. But sometimes, let's see if we can find a more, here's one, pretty heavy. Let me just stretch this out a bit. So this one here, this orange Voltic, minus 15. So there's about 15 times more selling activity in that frantic Voltic than buyers, rather. Now, clearly, since it moved price down a little bit, and there was some more selling, not quite as heavy this time, 3.5, but still quite a lot of selling going on there. But clearly, there was some significant absorption there because they didn't manage to move price down significantly. And one of the reasons I think for that was that sitting right below it was this key level, a macro level. So even if they had pushed a little bit further, it probably would have stalled down, certainly would have stalled down here. So good chance we had some trapped sellers at this point. So again, if you fancied the long trade, then you could lean against these Voltics and have a pretty safe entry for the move up. So hopefully that's clarified the numbers. Any more questions on Voltic? Don't see any for the moment. The last one I want to put on this chart is BSG. Anybody remember what BSG stands for? Anyway, BSG is before she goes. And this again is one of the topics that Ray, I think he covered it yesterday or the day before. But essentially, this indicator is giving you a heads up about where price is about to break through a prior low level or high level. So again, this is not a trade signal on its own, but it can be useful to know that if you're in a trade in a particular direction like this downtrend, that it is still managing to push through levels on the way down, even though this was a macro level. Before she goes, as it broke through it. Same here, still didn't go down immediately, but still continued downwards, and then this low level was broken again. So these indicators can be useful in terms of, do I remain in my trade at this point, or is something going to reverse? Obviously, if you were short and you saw a break or potential before she goes break to the upside, then that could be a good reason to reduce your position or exit the trade entirely. So that's before she goes. This is also available in both Ninja and Sierra chart. The pressure line is it's basically monitoring the strength of movement in the market. It uses an algorithm based on things like volume, speed of move up or down, the number of bars it takes to cover a certain distance, etc., to determine or calculate a value for the strength of the market. So, as I said earlier, it will tend to move in the same direction as price. So when the pressure line is moving up, price is moving up. When the pressure line is going down, price starts moving down. So it's the divergence between price and the pressure line that gives us some indication that we may have a reversal coming up, or at least a potential trade entry, assuming that other things like value line, so on, are in our favor. Should have mentioned actually that this divergence indicator, I mean, I'm applying it to the pressure line here, but you can put any value line you want in this region of the chart, and it will show the divergence again between price and that value line. There's also a value divergence to show the any divergence between two different value lines, which can be obviously again a heads up to something in terms of a change of behavior on the market. Okay, so let's move on to, still on the ES, still on a 1 minute chart, but some new indicators here. And on this chart, we've got, I think, three indicators. One for buying exhaustion, one for selling exhaustion, one for absorption. So you can see the set of colored parallel lines. The blue, pale blue parallel lines represent selling exhaustion. So we can see that after this big move down, sellers exhausted here. Buyers attempted to move up, and the orange parallel lines are buying exhaustion. So you can see that they were struggling to move it back up, had several attempts, but exhausted each time. But again, the sellers in their attempt to move lower also exhausted. There was no sign of exhaustion on the succeeding bars, but then price started to move up. Bit of to and fro and balancing here, where you see both selling and buying exhaustion at the same sort of level. So it took some time before the sellers managed to break through that level and move up. Now, obviously, sellers were still trying to push down to probably protect this level up here, but they were exhausting each time. And this little colored bar at the top here is absorption. So there's a good chance that when we get to this sort of level with the sellers exhausting and absorption at the top level, that things are going to stall. It starts to move down because the buyers exhausted here. And you can see that they were trying on the way down still to push back, but again, buyer exhaustion at each stage. Another bit of absorption here. So this caused it to balance for a little while. Still some more buying exhaustion, so price dropped. More absorption just at this bottom level. Again, a bit of a conflict between the buyers and sellers in who is the strongest. But the idea is that you would want to be trading with the stronger group of traders. So if sellers are exhausting, then you want to be looking at a buy trade rather than a sell trade, and vice versa for if the buyers are exhausting. Okay, so this can also be quite a useful way of managing your trades once you're in a trade. These are calculating based on order flow. It's looking at sort of strength of activity at various price levels, at approaching the high and approaching the low. You'll see on the settings that there's a number of things you could say. It's strong at this level, it's positive to strong, so not quite as strong, or negative to weak, and so on. So you can define these sort of characteristics of the price levels at both the top and bottom levels to give you a good indication about exhaustion or absorption. One, I don't know if I have it on here, but in places where you have absorption followed by exhaustion on consecutive bars, it's quite often a good place for a reversal. We have an indicator, you can have it here, PREV. We'll see if this picks up any. There's one here. So this pink triangle indicates that there's a likely move downwards. See, it didn't go far, but at least we've got a few ticks of profit there. It actually prints on the bar itself, and this little horizontal bar is the price at which it detected the price reversal was imminent. Another one here. So this would have printed at the top of that down bar. So again, you could have got quite a few ticks on a scalp trade going down there. See if you have any up signals. It won't print very often because it's looking for a very specific set of circumstances. I don't see any buy signals. Oh, there's one. So in this case, it's a yellow triangle printed at the bottom of that bar. So if you had, and it also had seller exhaustion at the same place. So good chance it was going to move up, at least by a few ticks to get you a scalp trade. So that's PREV. And this is also available on both platforms. Okay. Not sure if I've missed any. Don't think I missed any questions, but just repeat your question if I've missed it on the way through. I'll try and answer it as soon as I can. And just to let you see that it'll work, or these indicators will work on the micro. So this is the micro S&P, again from today. So the same set of indicators, measured move, pressure line, divergence, and the BSG all in there. So hopefully those of you who are trading micros needn't fear that you're going to be left out. These indicators will work quite happily on those. Also work on very short time frame charts. I mean, apart from the sort of 1 minute and 30-second type charts, also volume bars with very low settings for volume, like 15 or 20 trade contracts per bar, that sort of thing. So I think that's enough for S&P. Any more questions, just fire them into the chat. Don't want to take too long because I know Greg is waiting to follow me. Let's move on to the crude oil. So looks a little bit busy, this chart, but what I've got on here is the CL, obviously the candles and the CL, and the crack spread, which is the orange line, and the crack spread skew, which is the blue line. The dotted line, you could see, hopefully, it may not be too clear on the screens, but there's a dotted line there, which is 1 over CL. So it's the inverse of the CL pricing. Now, Ray has done countless lessons on trading crude oil with the crack spread, and also the calendars. I haven't put the calendars on here, but if you're in the room, if you're joining the room, you'll have access to a large collection of recordings going back years and years, many of which have dealt with using the crack spread and the skew to identify trades on CL. Now, this is based on one specific topic where he was identifying areas of either peak supply. This is where the skew is above the crack spread. So the blue line above the orange, that's peak supply, which indicates an area where the crude oil price is probably too cheap. Okay. Alternatively, you may have a situation like this one, where we have the crack spread, the orange line above the skew, the blue line. And that is a peak demand area, which probably indicates that the crude oil price is too expensive. So to actually trade these, and again, not just on one specific thing, I've put, the measured moves on here, but you could use other indicators that I've shown already to try and confirm the move. But what you're looking for in this area of peak supply is the blue above the orange, and the 1 over CL is outside of the skew. It's above the skew. So this sort of level, it would be a good potential long trade. Now, as I say, you would want to confirm with other things, but these are pretty important value lines as far as CL is concerned. So you have a fairly good probability that these trades will work out. Likewise, when you get here, this is the area of peak demand where price is probably too expensive. We want to see the 1 over CL outside of the skew, so below the skew in this place. So over here it was above the skew. In this case, we want it to be below the skew. So at this sort of level, you see quite some pin bars here. Probably if you put Voltics and things on there, you may see some of those. But at this sort of price level, is a very good chance that price is about to go down, and indeed it does. Okay, so that's pretty simple technique for trading CL. And as I say, if you put your other indicators on there just to get some good confirmation that you're about to trade in the right direction, then these can work out pretty well. Okay. No questions on the crack spread. So I'm going to move on to gold. Now this is the one indicator which is currently not available on Ninja for the time being. It was a recent release on Sierra, and I haven't yet managed to put it onto Ninja, but it'll get there. So this is something called a gold scalper, and as the name suggests, it's obviously intended for scalp trades. And what it's doing is looking at the current moves in gold compared to the moves in other metals like silver and copper and so on, to see if there's any sort of discrepancy and if one is moving and the others are not, and so on. So it uses that check on correlated markets as one indication of potential trade, and depending on the strength of that correlated market move, it'll calculate a score. And you can see in the top left here, it's busy calculating a score as things change. Current bar score is 2. It can be in a range between -8, which is obviously a bearish, very bearish score, and +8. So the higher the value, the more bullish it is, and the lower the negative value, the more bearish it is. And you could set in the indicator itself the minimum level at which you want to see a signal appear. You'd see that most bars are getting a signal here. There's occasional one bar here with no signal, another one here. But basically, it found there was no strength in that particular move to warrant a trade in that direction. As well as those correlated markets, it also looks at the pressure line to see if we have any divergence there. Adds that into the calculation of the current bar score. And it uses the volume delta. And again, see if we have any divergences, important divergences there that should be taken into account. So you see, as this goes through, it's busy calculating. Currently 0, so there's no trade signal here. It moves into positive territory, it will flash a signal up there, but if it goes back to 0, then the signal will disappear. So this is not something you necessarily want to jump in on the first signal. However, if you set these values on the minimum level high enough, and you do get a signal at, say, 4 or 5 or 6, then there's a pretty good chance it will stay with that signal to the end of the bar. And this is what has happened on the way through here. Now you can see that we had a number of consecutive up bars, all of which got a bullish signal, a down bar with a bearish signal. Now we had an up bar with a bearish signal. So again, not something that's automatically 100% trade, but you'll find the hit rate for this scalper is pretty good overall. I mean, I haven't got any statistics yet in terms of the overall success rate, but it works out pretty well. I mean, some of these trades, even if it's in the opposite direction, for example, here, if you got a doji bar, it signaled up, but didn't actually go up. But it may have gone up from the open by a couple of ticks, maybe enough to get you into a trade, or at least move your stop to break even and scratch. So it's still pretty much in beta. I've had some fairly positive comments come back from the group so far about the usefulness of the indicator. One other thing that I'm planning to add in here is the reason for these lines you see at the top, with things like liquidity monitor, stacking and pulling, and recent trade volume. These are coming directly from the depth of the market. And obviously, if you have like a significant increase in the liquidity on the bid, then there's a good chance that price will go up. You can see that the liquidity monitor was going up during this up move here, but now it's started to go down, and price has also started to move down. Stacking and pulling is looking at the changes to the stack, and again, if it moves up, that means it's more bullish, and if it moves down, it means it's more bearish. So I'm figuring to add this into the calculation of the bar score for the gold scalper. So it will take account of if it's in line with the movement or the activity on the depth of market, and hopefully trade in the right direction. Just looking at questions. Are the crack spread skew available in Ninja? Yeah, I mean, this is not an indicator as such. It's I mean, I use an indicator to calculate them, but you'll get the formula from Ray if you ask him about crack spread and skew. He'll give you the formula, but it's basically using related markets and just calculating this particular formula to use those markets as a measure of the strength of the CL market. So it's not an indicator. It's something you can definitely do in Ninja just by using standard value line formula. Do you have any plans to add aggregate volume upright bars as Ray shows in TV charts? I can add it to my to-do list. I have to warn you, my to-do list is pretty lengthy. I get, as you probably can imagine, I get quite a lot of requests for adding things to the package. I mean, Greg, who developed them on TradingView, has kindly offered to share his code, so I can put that into Sierra and or Ninja when time permits. But I'm still trying to negotiate an extra couple of Fridays in the week, an extra couple of hours at the end of each day. What else? So the skew, Roshan, it's actually using the gasoline market and comparing that with the crude oil to calculate the crack spread. There's one question earlier about the big arrows. I think that's coming from the BSG. I can go back to that very quickly. I think you mean these arrows here. So this is the BSG before she goes indicator that I mentioned earlier, showing that we have a potential breakthrough of a level coming up, either to the upside, which gives you a green arrow, or to the downside, which gives you an orange arrow. But again, this is not, a red arrow, green arrow, buy and sell type of thing. This is just to give you confirmation about what may potentially happen when it gets to the next key level. Okay, so make sure you treat all of these indicators the same way. It's an indication, nothing more, of something that's setting up which may be of interest. That's all they can do, is say, hey, heads up, you may want to take a look at this. It's something of interest, whether it's a cluster of Voltics, a macro level in the measured move, BSG about to break through a level, whatever. So treat them all the same way. Don't, in any case, trade on a single signal from a single indicator. Single indicator. Right. I think that's all the question. I'm going to move on to Ninja, because I know Greg is patiently waiting to join in after this. So hopefully you can see this Ninja chart. We had some difficulties earlier with Ninja, but I think it's projecting okay. So on here, let me just, hang on. On here, we've got a number of indicators from the Trading Mantis. It's here. So as you can see, Greg Schroeder has provided quite a number of indicators in his package. And the ones we're looking at on this particular chart are the book divergence, which is this yellow line, and two instances of delta divergence. One is relating to volume delta, and the other one is to the tick delta. So that's the red and blue lines. And we also have from often we have the Voltic. So here's proof that Voltic works on Ninja as well. And also big lean. So I'm just going to walk through some of the settings on big lean for those who hadn't seen it before. But essentially you have, the idea behind big lean is to show you where some big trades are taking place, so that if they happen to take place at, say, a top edge, and it's a big buy trade, and then price starts to reverse, then it could be a good place. That big buy trade could be a good lean for your sell trade as price moves down. So that's the idea behind the big lean. Now you can set the minimum block size. So how big does a trade have to be, basically, before you decide that it's a block trade or a big trade? So in this case, we're on CL, which is a fairly thin market. So it's set quite low, 15. Obviously, for something like ES, you would set it considerably higher. Otherwise, you'd get numbers on every single bar and every single price level. But that's the minimum block size before it will print. Question from Ed: is that like large volume trade indicator? Yeah, that's the block trades indicator on Sierra is pretty much the same way. It shows block trades that have occurred either on the buy side or the sell side. So we have you covered on both platforms. This base minimum liquidity chain is basically if the indicator picks up the fact that a number of block trades happening around the same area, it will add them together in a chain until there's a trade either in the opposite direction or the the depth of market starts ticking in the opposite direction. Okay, so that's the big lean. There are some session multipliers you can use here to automatically adjust this block size. I personally haven't used them, so I can't tell you how useful they are, but you can set those according to your local time, depending on what's the your open time of the market. And so, for example, if it if you're on New York time and open at 8:30, you may want to multiply the minimum block size by 3. So then it would look for at least a 45 before it signaled. So you have that available up to 3 different sessions. But as I say, personally, I haven't used them myself. Okay, so this set of indicators really, and Ray has conveniently covered most of this for me. Although I wasn't aware he was going to do it before I prepared my presentation. In yesterday's session, I think it was the last session of the day, he talked through using the 2 deltas. I didn't have the book line on his charts, but he was talking about how you could use the 2 deltas to identify things like absorption or trapped sellers and trapped buyers and so on. And certainly this is the idea here is to use them in exactly that way. What the book line, the yellow line, gives us in addition is confirmation about what the depth of the market is looking like at the moment for this market. It will tend to follow price pretty closely, but occasionally it will diverge because in certain markets the book line will go up as a sort of spoofing exercise, trying to encourage traders to buy with the intention of reversing the trade immediately afterwards. So there are a few examples to look out for. Now, we're already at the hour, so I'm not going to spend too long on here, but let me just see if I can pick out at least one example that in fact there was let me just see if I can get the right time. Because I did have 1 or 2 picked out to show. This is earlier in the day, that's why I couldn't see it. But this is the 1 minute chart. Let me just switch to uh, 25 volume. But here's an example of the sort of thing you could look for, where we have a cluster of Voltics at this top edge, and the deltas have been moving up, but when they start moving down, unfortunately, I don't have the book line on this chart because I had to restart Ninja. We were having some problems with the projection of the Ninja charts earlier. So the yellow line, I should mention, only plots in real time. So we'll see that later on. You can see it's here because that was when I restarted the chart for Ninja. So unfortunately, we've only got the delta lines for this time earlier on. But these sort of clusters of Voltics can provide, plus the big leans that we mentioned earlier, can provide good support for an entry, in this case potentially a buy entry, or in the earlier one, a sell entry. And if you review Ray's lesson on the deltas from yesterday about how to identify trapped buyers and sellers, then you'll know how to use these two lines, the volume and tick delta. And together with the Voltic and big lean, you can usually get into a safe trade by using those as sort of cover for your entry, either to the upside or downside. My experience, crack spread lines and the like cannot be done in NT unless, of course, you are a master programmer. That is the crux of TV and why Kim and Ray use TV for educational purposes. Okay, I mean, I'll confess personally, I haven't put the crack spread on Ninja, but I know Greg Schroeder has a way of calculating value lines, which I thought was certainly capable of using the or showing the crack spread. I'll check it, Renee, but I haven't, as I say, done it myself. I tend to do most of my stuff, certainly development stuff, on Sierra. In my view, it's a better development platform. But anyway, I'll check it out. And if I can get an answer back into the room by tomorrow, I'll let you know. I don't know if Greg Schroeder is in the room, but he could pipe up if he knows what I just said was accurate. Right. We're over the hour. I'm conscious that Greg is still waiting his turn. If there are no more questions on the this set of indicators, I'll hand over to Greg now. And if you have some additional questions on these indicators, I'll come back later on and answer those. Okay, so Voltics could be used as an entry on absorption. Yeah, potentially. I mean, if you, for example, if the absorption happens at a bottom edge, and you have a bunch of Voltics sitting around there, the absorption is probably indicating that the sellers are being absorbed. And if, all things being equal, you believe that this is a valid long trade, then you could put your entry just above those Voltics so that you've got some protection. Because, there's quite a lot of volume where those Voltics are sitting. So there will be both buyers and sellers at those levels. So if price goes up, the sellers will start puking their positions, and that will help your up move. So, yeah, I mean, there are good reasons to put an entry just above the Voltics in such a case. All right, I'm going to close it there to say if you have additional questions, post them in the chat, and I'll come back and answer them later. So I'm going to stop sharing, and hopefully Greg can now take over. Thanks for your questions, everybody.
Thank you, David. Can everybody hear me?
Yep.
Okay, that was brilliant. Let me just make sure I get the right screen. Okay. Yes, thanks again, David. That was brilliant. Such a wealth of knowledge. You've been a great help to me throughout my trading experience and learning. So, once again, thank you. I know Kim is the glue that holds us all together. And in this room, we have such a wealth of knowledge between David and the other Greg, and believe it or not, everyone in the Skype room. I mean, it's a 24-hour education. I know Ray does his classes and everything, but we just take that class and run with it. Twist it every which way, and whoever doesn't understand something, we certainly clarify it in the room, and there's so much help in there. So we have a great team, and we really want to keep this going. So what had happened with me is, there's so many things that Ray goes over, and when you start your day and you prep your charts, there was things where Ray would say, "Did you have yesterday's high, yesterday's low?" And if you didn't, you were the bloody misery of the day. And sometimes I would get caught, and I would sit here and say, "Well, wow, that's me. I forgot that line, and I should have done that." Or I was running into the issues where I did have those lines on because I was manually drawing them, and I would clear up my chart because I had some trend lines on and it was just too much, and I would hit delete all drawings, and I lost everything. So I'd have to start from scratch. So I started building some tools to help with that, and it just progressed from there. So we can go over some of them. Um, and I am always open to any, you know, comments of things, how we can make things better or things we haven't thought of or whatever. The only big issue that we have is in TradingView, PineScript is the language that you build in, you code in. And PineScript does have many limitations to it. It can only draw so many lines. It's going into the future is very difficult. It's tough to work with sometimes. And the biggest thing is there's no order flow in it. And I think when we listened to Ray when he was building Max, I think these were all the issues that he was coming into between these different platforms. They all have limitations. So I think Ray was pushing the limits, and we're trying to push the limits, but we're doing the best with what we have. So we have some tools without order flow, and we've done as best that we could with them, and we'll go over some of them. And if you have any questions or comments, ideas, suggestions, we are certainly open to everything possible. So the latest one that Ray has gone over is the big board, which I have up now, right? And I named it Ray's RGL, and now it's version 5 because we added his aggregation, volume aggregation lines to it. That was a big part that I think all of us were having a problem with. But now that we have the code in there and we can match his lines, I think the learning process becomes much easier. Um, he's done many classes on it, so I don't think I really need to go into the classes. So we'll just really go into the indicators itself to show you what we do have. Um, each indicator, remember, has a multitude of settings. You can change colors. Your remember your UTC times have to be where you are, and your time input for your RGLs have to be where you are. So just make sure when you do download these things or they become available to you, you make sure that everything is appropriate for where you are. And you can turn things on and off. So if you don't want such a busy chart, you can, if you want to take the ag lines off for a second and turn them back on, you can do it, which is great. And Ray did this and came to us with it and asked us to put it together. And I think everybody really loves it. So this was a good tool. Um, as a side note to this tool, when I was trying to duplicate what Ray was doing, and if someone's interested in it, you're certainly welcome to it. Um, I had built utilities to actually try and analyze these volume bars. Um, so I built utilities to start looking at each bar and see what the volume comparison was, where the bar was closing compared to the prior bar, all of the criteria that you see down here, because I was trying to reverse engineer what Ray was doing. So before he was able to share the specifics of how he was getting the aggregation lines, this is where I was going. So I have spent tons and tons of time analyzing all of this. And I have something else built as well, but maybe at the end we can show that. We'll see. So going back, that's Ray's RGL version 5. And everybody seems to be loving it. I know Kim loves it, and it's working very, very well. So what I'll do is we'll pop back to something that was my first indicator that I built. And this was the basic thing to keep my lines on the chart. So it was a repetitive thing. It had to be done every day. And I just found myself in a position where if I just automatically put them on, I can hide them if I want, which was the big thing. You can turn them on, turn them off if you're trying to clean up your chart, and alter them to whichever one you want. Now, like I have the mock open here, but that didn't have to be the mock open. If you wanted that line to be something else, you can just go in the line itself and customize these things. The text, the size, the color, yesterday's low, US sessions, London sessions, whatever you want is in here to fully customize it however you want. As I said, transparency, the colors, the size of the text, where you want it, above it, below it, on side of it, the offset, you should be able to do. So it was just a simple thing that helped me anyway, just keep some of the repetitive things going without me forgetting. It was in front of my face. And if I did need to remove it from my chart for the second because I was looking at something else, it was just an easy click to hide it. So this is what we call the automatic session lines, and that is certainly available to everyone as well. Kim is now handling the management of all the indicators that we have. So another one that I built, some of you may have it, I'm not sure, is what I call this fractal level 1 fast slow. Now Ray did a lot of classes and talks a lot about fast and slow moves. So I tried to think of a way where I can see that. So what I did was I know he uses the Bill Williams fractal indicator, but the problem I had with that is a lot of times in the Bill Williams, such as here, when there was 2 candles with the same exact high, if you noticed, it wouldn't see it as a fractal. And that bothered me. So I wanted to do my own code so I can build the fractals the way I wanted. And if there was 2 or more of the same candle highs where the Bill Williams was not seeing that as a fractal, I wanted it coded so it does pick it up as a fractal. So when you go into the settings of the indicator, you'll see you can, in the inputs, you can select whether you want the definition of your fractal. So how many candles to the left and how many to the right. And you can play with that depending on the time frame you're on or however you want to define your fractal. So then what I did was I have the regular lines to show that come off the fractals, and you can make them whatever length you want. So we can just bring it down to 10 for now. And those are I colored them blue and gold. And these are the dotted ones. But what I wanted to see is a line drawn that gave me 2 times the length of the fractal. So let me just clear this up. So if we look at a fractal between here, this fractal and this fractal, we could see it took 1, 2, 3, 4, 5 candles to make that fractal the fractal. So what I did was I drew a line in the indicator that stretched out this 5 plus another 5. So I know if I don't make it back to that level within the 10 candles, I consider it slow. If we come back within that time frame, then we have a fast. So that was just a little technique I was using to track whether we have the fast and slow moves. And that's, once again, you can change the settings or just turn the fast and slow part off and use it as a fractal and define them however you want. So that's how that one evolved. Array every night does key levels. So the issue I was having with key levels was he would put them on his, on his tweet and his Twitter, and I would be drawing the lines. And once again, if I hit my delete all drawings or something, I'd lose my lines. So now I have a tool that can put them on and take them off and just hide them with a click of a button, and it keeps them on the chart all day long. And if I need to hide them or adjust them, I just adjust them every night. I just come in, put my levels in, and it draws them. Actually, I should have put them in here, but they do draw, and you can change these lines, the colors, and there's an offset in here as well, where you can change the tag on the end where it says what the level actually is. So if we have time in the end, maybe we'll fill this in. Jack Ryan. So Ray spent so much time on Jack Ryan. And he then did a class one day, and he was using a 15-minute chart because it was so fast. So what I did was I programmed the rules of what he was doing on that 15-minute chart. So we came up with a grid, and I based it back on 10 candles. We put the time of each candle so you know what candle you're referring back to. And remember, he had his number format, 1, 2, and 3, and what the outcome would be 4. So in this case, you had a 1, 2, 3. So naturally, it would lead to a 4. 4 is defined as a buy oil at the bottom edge. And in here, this will always read what time frame you're putting it on. So what I do when I put it on my charts, I have a chart such as this. I have several charts, but this one where I put on a 5-minute chart, a 30-minute chart, and a 1-hour chart. And as you can see, it'll tell you what you're on: 5-minute, 30-minute, 60-minute. And it'll tell you what each candle is producing as an outcome. So if you look at the 3 time frames and you see this is where you are on the current candle, if there's no outcome, it'll give you a question mark and yellow. It also, these indicators do go test check the data coming through. So if it does not like the data for some reason that's coming through, it will tell you that as well. So this is what I came up with the Jack Ryan. Now, I know Ray was also coming up with Jack Ryan. I don't know if it's going to be in his log trades or not, but I haven't seen him really show pictures of what he was posting. But this was really taken from what he was trying to put together. So this is just our version. Some of you are working with it. Just give me feedback. And if there's anything we can make it better, that's absolutely fine. We can try and do it. So that was the Jack Ryan. So then we went to, I know the other Greg has it in his level 2s. I would be looking at a chart and just would totally get away from me or whatever, but this sticks them right in front of my face. Again, PineScript has some limitations, so we catch most of them with this. It's not 100%, but it does the job well enough for what I need. So it will catch the level 2s and print them when they happen, which was a big help for me because it was just something, again, when you're focusing on other analysis, these things sometimes get away from you and you don't notice them. So that was another one. So then Ray did a lot of teaching on his matrix. So the issue I was having with the matrix, again, I had lines all over the place and I did want to hide them at times. And if I wanted to remove them, it would be very difficult to quickly start redrawing them. So if you want to put the matrix on, I can hide it or I can bring it back very quickly and see. So we can put the 30-minute verticals on as well as the hour verticals. And naturally you can put, it's all configurable. So if you want it every 10, every 5, or whatever you want, that's certainly in the input screen. I know it's a little confusing, but it was difficult to program. But once you figure it out, it's pretty straightforward. And once again, the reason why you have to put in where you want to begin, what level you want to begin at, is PineScript has these limitations where it only draws 10 lines, 20 lines, and it won't let you go further than that. So it's not something that I could just put on and have it draw all over the place at any level. I had to really focus in on where we were on the chart and get these things to draw properly. So let's see. Then we moved to the option price box. Ray did some classes on that. And, instead of doing the calculations every day and putting them on and hiding them and moving them, I had built this so that we can just go in, put our I'm sorry, that's the matrix. Put our levels in, the day, the strike, the call price, the put price, and it will configure the levels for you. So that was a big help to me as well. And I just carry it forward and update it each day. Raise RGL we did. So this one, let's see, what do we got here? I will hide this. Oh, okay. So originally I did just an RGL box. This is automated and once you configure it, it will grab these boxes and draw them however you want each day. So when you go into this, it draws up to 8 RGLs, or you can put it on several times if you have more. But you just configure it however you want. So this is the New York Open. I configure it 9:29 Eastern time in the morning, and I have it draw to the end of the day at 4 p.m., 1600 hours. And the way you want the box to draw is all configurable. So if it's a red, if it's happens to be a red down candle, you can grab however you want that RGL to draw. So on a red candle, maybe you just want to do it from the open to the low, or however you want. So the high to the close to the low, you can configure it however you want. And then your label, you put your label in, the color of the label, and the size of the label. Now I put this override box in because Ray does put the RGL levels in sometimes. So sometimes if his RGL levels off from mine or whatever, I'll click on this and I'll put his numbers in, and it will override what this is looking at and put Ray's in. So we have that option as well. And this you don't have to do much with. Once you set it, you forget it. Every day it will update and draw these line boxes for you, and they come across your chart as far as you want. So let's see. All right. This I built was something when Ray was doing his spaghetti charts and I had lines all over the place. I couldn't see my chart anymore, but yet I didn't want to lose track of my value lines. So what I built this, and it can be adapted to any market that you're trading. So if you're doing gold, you can enter your gold value lines. If you're in bonds, you can do those, whatever. This just happens to be my equity chart I usually trade the ES. And this is just the number of bars back that you want to compare. So if I'm on a 1-minute chart, I compare back 5 bars back, 10 bars back, 20, 50, and 100. So I can get the macro view and the micro view of that value line. And it helps me because this is real time updated as this chart is going. And I can see when this starts lighting up green, I know I'm just on the buy side. And if it's lighting up red, I'm on the sell side. And if you can see where it's changing and turning, which is one of the better tools that I use each and every day. So it's totally configurable. You can go into the settings. If you don't like the 510 this way and you rather see it 5 bars back this way up to 100 bars, or however many bars you're looking at depending on the time frame that you're in, you just come in and put whatever you want in as far as what label you want and what the formula is that you're looking for as far as the value line, and your look back periods, and however you put them in, that's the way they're going to appear. And you can select just 1 candle back, 2 candles back, 3 candles back, or I went by 5, 10, 20, 50, and 100. And as far as the placement on the chart and the size of the chart, that's all configurable as well. Maybe you want the top, bottom, or you want it smaller or whatever, depending on your screen size. Totally up to you what you want to do with it. So those basically are the 10 indicators that we have that Kim will be putting in a package. Some of you have, but any comments we're certainly open to. Any updates or any issues, we certainly want feedback on these things. And if you can think of things that we should build, we can do that as well. So we're always looking for things. I can just show you quickly something that I've been working on. When Ray came up with his volume aggregation lines, I started building this. It's still basically in beta. It does work. I just haven't released it yet. So when you get a green line, a green stripe, it will put in your low volume node. It will do your measurements. I tried to get in um, diagonals so we can try and figure out where the Nash equilibrium is going to fall off. And then we get to projection levels up here where your targets are. So it does it for the green stripes, the red stripes. We turn the color blue when we move from a green to a red, so we can show that there's a change happening where we're going down and up. So it's just ideas we're putting together. A lot of time goes into it, but they're good. I mean, we have such a group here, and I'm sure that if we all work together on this stuff, put our ideas together, we can really come up with some phenomenal stuff. So Kim, I think I covered most of everything. I guess I should really look at the questions. I'll go through these questions. As I said, matrix, the price lines, can we pull them using requesting? I'm not sure I understand the question, Roshan. The matrix lines are fixed once you set them according to what you're working on. That's how they'll draw. So if you want them every 10 points, every 5 points, or whatever, and then naturally your verticals are going to be based on time, and that is if you want the hourly lines, 30-minute lines. But whatever market you're on, you can certainly configure it. You know, the bonds go in 30 seconds, so I had to put the option in there to make that conversion. So when you look at the settings, it is set to work on a bond chart since the bonds are a little differently calculated. Yeah, I mean it's all of us. It's believe me, it's Ray's knowledge that we convert down to our level and try and make some tools to help us. He is a fire hose of information, and you just can't think of everything at every second of the day. So sometimes these tools will help you. It's in front of your face, and in TradingView anyway, because that's really mainly where he teaches. A lot of the order flow is in NinjaTrader and Sierra charts, and David and Greg has done a fantastic job on that end of things. So I think the combination of everything is fantastic. So we'll just keep growing as a group and putting this stuff together. Kim, are you with us, or should we have a building session and try and figure out what we should build next? Voltic for TradingView. The problem with Voltic is that we have no order flow. I've thought of different ways of trying to get it. I'd love to do delta buckets in there and things like that, or automatically get data feeds in there to put our lines in that Ray puts out every night as far as his tweets. And it's just we can't get data in there. We're very limited on what we can do in PineScript and TradingView. But believe me, if there's a way and we can figure it out, we'll get it done. So let me reach out to Kim. Let's see where she is. Let's see. Yeah, an indicator to get Ray to trade for us. If we could do that, boy, oh boy, we're going to be in good shape. Ray is one big book wealth of knowledge. Let me see if I can find Kim. Hang on. Okay, sorry about that. I did talk to Kim. She's on a call. She will be with us shortly. So I had talked to Kim about doing tech sessions. Hopefully, we're going to implement those as well. And if we could all get into a tech session and discuss different things and ideas, from trying to establish what value lines are. I know a lot of us are confused with those things, to getting our ideas together. Um, we can, I think we can really grow leaps and bounds with this stuff. Let's see, RGL that updates. Yes, I'd love to have that. Well, no, the RGL tool does update. That one does automatically update. So we didn't have an issue with that because it's based on the candles and the time. George, access to rest of the end days. We're trying to figure this all out. I think Kim is going to have some kind of database put together where we can grab everybody's screen names and give access accordingly. So we're trying to put that all together now. Reeve, you got them all, don't you? I thought you even had some beta ones that even I haven't seen yet. So the indicators will be made available to everybody. Kim is setting, we'll talk about that. I don't want to step on her toes with that, but she's going to be controlling all of that going forward. We're just going to do the building and the legwork behind there, and she's the glue that keeps it all together. So without her, we fall apart. So Kim, I will go on mute and I will let you take over and answer any questions that anyone has left. I'll be here though. Hi, everybody. I think Kim is just having some audio problems. So just if we give a minute. And I did scroll back and I noticed some of you did have questions that I missed. So if you want, what you could do is just, not to take time in this presentation, I'm available in the Skype room. Just pop them out. Lori, if you have an issue, I saw something that you had questioned and everything else. So certainly reach out to me on Skype and if we have to even share a screen, we can do that as well.
just while we're waiting for Kim to turn up, I thought I'd just give people who haven't seen it before a view of the sort of documentation that comes with the Often suite. As you can see, large number of indicators there, over 100 pages in the document. And after a brief introduction to what each indicator is all about, it goes into detailed, giving you the settings for each of the parameters, description of those, and some examples of the indicator in action. So that's available for all the indicators, right down to the most recent stuff. So a full description. And where we have it, things like this link to the recording of where Ray covered that particular trade exercise. So you can follow up with the recording, and that will help you implement the indicator even more effectively. Okay, that was all I wanted to cover. Are you back, Kim? I guess not.
Okay, can you guys hear me now? This is weird. Oh, I think now it's like it's an open mic with an echo, isn't it? Now can you hear me? Yeah, we'll try this. We'll go through this mic. Yay! I don't know what was going on. I was going to say it's the same thing that I use each and every day. Super crazy. Anyway, appreciate you guys so much for being in here. Thank you, David. Thank you, Greg. Now you guys can see why we have the best tools on the planet. I'm going to go ahead and, as I was saying that I thought you guys could hear, but clearly you couldn't. Serge put this together for us just so we'd have today, so you guys would kind of know what's coming. And who am I calling a tool? Yes, all of us, right? So we will have a package together. I will try to have it all ready tomorrow with, Ray will be doing his final day on Friday. So for those of you that are in just for the scalping, this pertains more to you guys than it does to traders that have been in our group. The special will be, a special to be able to be with us in our daily trade room. It'll have a package with indicators. It's going to basically be the kitchen sink, but no washing dishes. So you're good there. Then we do have the tools for TradingView, like you saw there from Greg. And then we have from Sierra Chart and Ninja, which those are the ones that David, and then the Mantis ones were developed by Greg. So we'll have options for kind of training only, training with indicators, and separate packages for the different indicators. Will that help? Will that fit? Because I know some of you may say, you know what, I want to go all in. I want to be in there with the group. We have an amazing group, as the guys were saying. The Skype group is super, super helpful. Ray's phenomenal. I think our trade room is second to none. It's really, really good. And then we have all these wonderful tools. So love to get your guys' feedback on that. Don't forget, I'm going to go ahead and stop the recording here so that there's no reason to go on with that part, but we'll continue to answer questions, make sure everybody's good and ready for tomorrow. Can't believe it's already going to be Friday. That's pretty crazy.